All right, good morning, everyone. It is 9:19 on the morning of September 7th, 2022, and this is my pre-market strategy session. Today, a couple of interesting things happening, and actually, I'll start with Bitcoin. Been waiting for Bitcoin to break down here, and it did break down below this really important support level yesterday, and if you look back, if you look way back, the support level comes from this November 2020 time frame as well as this December 2017 time frame. And there's this, I believe, is going to be just a part of a sort of a long-term downturn. It took 3 years for it to go from its peak here in 2017 to its breakthrough in 2020, and it's likely that it'll take another 3 years for it to bottom out and start moving up again. So this downturn is a long-term downturn. This is its neckline right here. And looking out 3 years, let's see, from the breakdown, suppose the breakdown happens here between now and October, then 2026, the chart doesn't go out that far, but it's bound to this neckline right here from the head and shoulders pattern. Of course, I don't think Bitcoin's going to go negative. I can't imagine anybody, uh, you know, paying to continue to own back Bitcoin. But anyway, um, I guess the next level to watch is this 13,000 area right in here, and let's see if the neckline is any judge of that. Let me move it there. There we go. Then February of 2023. So in the next, was that 4 or 5 months? This is kind of the next spot to watch. We're kind of coming up on the end of this sort of 3 month time frame, and it just seems to work on 3 months. It just sort of starts and ends a different sort of price action. And so let's see, 12 September, and then take that out to what, December 12th. And so this is just roughly speaking. So December 12th, probably be around the 17,000 price mark by that time. It's just it's looking really bearish. These head and shoulders reversals. This is actually more like a Wyckoff distribution, but like nice little head and shoulders to end the Wyckoff pattern here. This downturn is going to be sustained. It'll be a while before things start to pick back up again for Bitcoin. Long while. All right, then the other markets, sort of the regular S&P 500. Got a lot of lines on this thing. There's a range I was watching yesterday. And interesting, the bottom end of the range I was watching yesterday, it bottomed out through that, and it was a good time to press the shorts for a quick trade yesterday, and then did its best to close back up above this low again, but couldn't quite make it yesterday. So this morning, here we are again. So here's yesterday, dropped down here, came back up above this price, dropped down again, and then fought for that price for the rest of the day, and couldn't quite close above that support and resistance price of 390.89. And here we are this morning. Pre-market, it was trying to hold up above that price, and then the 8 o'clock crew came in, sold it off, and here it is back up toward the top of that price again. Nothing goes down in a straight line. And so I think it would be kind of strange for there not to be a little bit of an up move here. I mean, it did try and gap up on that's Friday the 2nd, I believe. Yeah, Friday. And but it failed miserably. And so here we are testing this price again. In which way it goes is anybody's guess, really. You know, on a day like today, after a move, let me get rid of some of this stuff on the. I'll just get rid of all of it, really. I'll keep the trend line. Get rid of that horizontal. Get rid of that horizontal, and I'll keep the fib, but I'm just going to make it disappear. So it would be a little bit strange for it to really fall out of bed right now. After it's come down and hit below this line and then closed below it, it's most likely going to give a head fake here and try and head back up to this resistance line here for the, it always takes longer for these things to play out, and the signals are never 100%. Here we are. There's some price support here and a little bit of a breakout upward happening after that. So I'd be really surprised to see it just to plummet down below here right away. Now, I think over the course of the next 8 to 10 weeks, we will be breaking this low right here. But we're getting close to oversold conditions down here on both the SPYs and the Qs, and so if we go into oversold conditions here, then there's going to be some price relief. There's going to be some short covering, some kind of activity to the upside. May not, I'm still, generally speaking, I'm still bearish, so I will be looking for trades to the downside. On the 1 minute, you can see it went into overbought for just a short amount of time. Here we are on the 1 minute. Let me open this up a little bit. There we go. So here, pre-market, it went into overbought. And generally what it tends to do after it goes into overbought, it creeps its way into oversold, like you can see back here. It's just sort of the rhythm of things. It just works that way. So, and this is the 1 minute though, so the 1 minute isn't as reliable all on its own. You want to pair that up with another relative strength index like the 10 minute. And then use that in conjunction with, what I like to do is use it in conjunction with the VIX. So the VIX is coming out of overbought here on the 10 minute. That's the end of the day. It looks like, that's pre-market. And so when everything's in the middle like this and all the indicators aren't really lining up between the VIX and the Qs and stuff, it's usually bullish. So even though we're getting close to the bottom end of the relative strength range here, where'd it go? Let's get that one. Even though it's getting close to the bottom of the range here, it doesn't mean that it can't, pop back up for a little bit again. So even though I'm overall bearish, I am on the lookout for a trade to the long side too, which we could get. We could get kind of a creeping floating market today to the upside to break some of those levels. The Qs are right here at the bottom here of this this price, this sort of little bottom right here. So breaking down below and closing below it is bearish. But this whole price range, generally speaking, right in here, there's going to be a fight between the bulls and the bears in this area. And when the VIX is in a chop range, the mid 20s, it's a back and forth between the bulls and the bears. And at any given time, you can get a big rally up or a quick, fast move to the downside. So it really is a time to keep a really tight, real close range on your risk. What I like to do is, in this case, I'll size down. I'll go down in the size of my trade, and and I'll usually have in periods like this, I'll buy options that are a month out, so that way, I can tolerate, a point, 2 points out of my against me, and just use time to get paid off on the trade. So yeah, right now, it's looking to me like the VIX is just kind of consolidating for the next move up. But that doesn't mean the VIX can't go back down here and kind of mess around, you know, as it chooses to do that and just chops traders up. So yeah, I'm using smaller options sizes, like I'm trading a maximum of 2 options at a time, and I'm willing to take days to get into a position to the downside. So yeah, I'm just gonna kind of sit back and take my time and get into some shorts after. I want to see what it does today on the Qs. The Qs is where I trade the most. If we get another close below this price level, I think it'll be time to press the shorts a little bit harder. If we come back up above this this price line right here, the markets are open, then I'm going to be looking for a little bit longer of a time frame to get into a swing trade on the short side using put options. All right, everybody, and actually, you know what? Let's bring that Fibonacci back. Okay, this Fibonacci is a little bit old. Let's get rid of that Fibonacci, and let's take it from the close here, this topping close here, this recent low. And so 308.33 is a spot where I will be looking to start averaging into shorts if it closes above this 293.54. Otherwise, what I'm looking for is for it to dip down, close below again today, come back up, retest this 293.54 level, and then I'll start pressing shorts after another rejection of that price level. And then we ought to be looking for a breakdown below this 271 level. Should take somewhere around, yeah, pardon me, somewhere around 8 weeks. All right, everybody. Good luck out there. Keep your wrists tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's strategy session. I am out.